Yes.
Hello, welcome to America First Wealth Management Investment Outlook for Cinco de Mayo, May 5th, 2025. My name is Dan Lew. I'm the Chief Investment Officer and Portfolio Manager at America First Wealth Management. Quickly turning to our disclaimer, this material is just intended for informational purposes. We're not providing any investment advice, nor are we offering to recommend purchasing or selling any securities. And these opinions are as of today, May 5th, 2025, and subject to change without notice. Thanks for tuning in. Market highlights last week for the week ending May 2nd, 2025. Major indices rallied on trade optimism and jobs data. The S&P 500 index had 9 consecutive daily gains, the longest winning streak since 2004. And rising 2.8% for the week. We are recording this after the close on Monday, May 5th. The S&P failed to rise for 10 consecutive days, which would have made it the longest winning streak since 1995. But unfortunately, we did not set that record. Stock gains last week were fueled by strong April jobs report. We saw 177,000 jobs created versus consensus estimate of only 130,000. We also saw signs of easing U.S.-China trade tensions. In the backdrop of the stronger economic data, the 10-year Treasury bond yield did rise slightly. So far, we've got 72% of S&P 500 companies have reported Q1 earnings, and a very strong 76% have exceeded earnings estimates as of May 2nd. Last week, we had notable performances from tech giants like Microsoft and Meta Platforms, and those contributed to the strong equity results last week. However, all sector earnings we see are being revised lower, with tech, consumer discretionary, and industrial seeing the largest number of downgrades. And these are downgrades by Wall Street analysts and also from the earnings conference calls we've been listening to. Many CEOs and CFOs are tempering their guidance given the environment we currently have with policy uncertainty. Until we have some stability in policy, we will probably see that as a headwind in terms of corporate managements becoming aggressive in deploying capital and investing in growth opportunities. So we are quite wary of that backdrop. Nevertheless, we did see a very strong rally. The S&P 500 is now above the so-called Liberation Day on April 2nd, where Trump announced the policies to tariff countries that had significant trade surpluses versus the U.S. More on that later. End of an era. Warren Buffett on Saturday announced that he is stepping down as CEO of Berkshire Hathaway at year-end. He's leaving behind a record that is probably unsurpassed in modern investment history. He's also leaving behind a portfolio that is very heavy in cash, over 350 billion in cash, to his successor CEO, Greg Abel. 350 billion is about the size of a medium-sized country in terms of the ability to effect significant investments, and will be very interesting to see how the transition occurs and what Mr. Abel focuses on going forward. Turning to our market outlook, the Trump policy of strategic uncertainty with respect to tariff negotiations is likely to continue to drive high market volatility. And certainly this morning, Trump had announced 100% tariffs on foreign-made films. And that obviously has an impact on entertainment companies, Disney, Netflix, Paramount. Um, these all source of adverse stock impact today from those announcements. And this is all made in the effort to reshore more domestic film production in the US versus letting companies do their productions overseas. In any event, some of this might be politically inspired, um, but it certainly is having a dramatic impact. And certainly it does promote the Make America Great agenda and creating more jobs here domestically versus overseas. The big event this week will be the FOMC interest rate decision on Wednesday. There are no changes expected. Fed funds target rate of 4.25 to 4.5%, being what the markets is looking for. But we're going to show some data later that could be supportive of a potential surprise rate cut if that was to happen. I don't think the market's looking for it, but there might be the potential for a cut. There's certainly, we would expect to be a change in rhetoric from Chairman Powell because of these data points that we're going to show in terms of um, some credit issues and some improvement in terms of inflation numbers. But for Wednesday, the market is not expecting anything. So any cut would be a huge surprise. Any change in rhetoric towards becoming dovish would also be a positive surprise in our opinion. Major companies that are reporting this week include Palantir, Advanced Micro Devices, Uber, Walt Disney, and Ford. The key economic indicators. Today we had the ISM Services PMI for April. We'll talk about that later. On Tuesday, tomorrow, we've got the U.S. trade balance data for March, and we should see some indication of what some of the early tariff impact might be in terms of providing some impact in March. Certainly, we didn't see the Liberation Day tariff announcement until April 2nd, but there could be some impact in March as many countries, in anticipation of Trump becoming more tariff-driven since assuming the presidency, that could have an impact on trade data. We also saw the weakening of the dollar occur, which certainly could impact U.S. exports. Wednesday, as we mentioned, the FOMC rate decision, 2 o'clock. We also are seeing consumer credit figures for March being reported on Wednesday. On Thursday, we've got the initial jobless claims and Q1 productivity data to be looking out for. Turning to weekly market stats for week ending May 2nd, as you can see for the week, all equity indices were up 2 to 3%. The only index we have that was in the red was the bond index, down 34 basis points. For the quarter to date, we are seeing a mixed bag in terms of some improving equity data, largely being more technology driven. As you can see, the NASDAQ and NASDAQ 100 indices are leading quarter to date. Dow and the value index, both large and small value, are trailing, but all indices are up positive. Looking at the year-to-date figures, we've seen the equity markets being led by international stocks. EFA is up almost 14%. Russell 1000 value is up 30 basis points, but pretty much all the other equity indices are down. And bonds are up 2.4%. Turning to the Magnificent Seven, which we've been tracking for a while, we've So a very strong showing by Microsoft with very good earnings results, up over 11% for the week. Um, Strong results by Meta as well, up over 9%. The only name in the Magnificent Seven that was down was Apple, with a weaker earnings report, down 1.9%. However, Apple did announce a increase in their share buyback, so we do expect Apple to at least stabilize due to the buyback, but they've got some work to do, and Apple is certainly one of the major companies that will be impacted by restrictive tariff policy if that continues. Apple, as we know, is quickly trying to move their manufacturing and assembly out of China as quickly as possible, shifting to countries like India and Vietnam for final assembly and manufacture of iPhones. So that's obviously going to take some time, some money, and some effort. Um, Also, tariffs are going to impact their ability as China counter tariffs the US, making US products more expensive for Chinese consumers to purchase. Looking at the year to date, we do have two of the Magnificent Seven stocks, Microsoft and Meta, now positive. Previously, everything was down uh, double digits or more, double digits, and we now see two stocks in the black year to date. Shifting over to sector performance, the only sector that was down was energy. Energy continue to see being impacted by crude oil prices continuing to decline. The industrial sector being a beneficiary, obviously, of lower energy prices. Um, Tech was strong second performer among the sectors. Year to date, however, tech is negative. Consumer discretionary is also negative. So those are the two worst performing sectors. Energy is the third worst. Got a number of sectors in the positive. Still, some of the defensive sectors are outperforming. Got utilities, consumer staples being the top two sector leaders here to date. Uh, Turning to the S&P 500 chart, this is a one-year chart, and we are highlighting again key dates here. Uh, Election Day, Inauguration Day, January 21st, and the Liberation Day, early April. We also show the peak to trough drop down 18.9%. Peak to trough year to date, nice recovery off that bottom. Certainly the last 9 days has certainly helped the market rally back. The RSI is getting towards oversold, not in the extreme oversold territory, but obviously the pullback today, it shouldn't be a surprise, at least technically. And certainly the tariff announcement on foreign film production certainly reflected the fact that Trump is not done with making tariff announcements. The dollar index continues to be weak. We're hovering around the 100 level for the DXY. Quite surprisingly, one should not really see the dollar index decline when there's tariff increases. It's been counterintuitive to see the dollar index decline with tariff announcements. Normally, used to see a dollar strengthening, but this is against what the textbooks and economists have been saying, which is a surprise. Also, with the dollar declining, we'll be very curious to see what the export data reveals. Obviously, a weaker dollar should tend to benefit exports. But we'll see what the impact of other countries' demands for U.S. products, given their counter tariff announcements. Um, so it's a pretty interesting dynamic here. The RSI for the dollar is now turning up. We wouldn't be surprised to see it a little firming up in the dollar. Um, Obviously, a surprise rate cut would weaken the dollar, in our opinion. Any comments about being hawkish would also firm up the dollar as rates remain higher. U.S. rates are now higher than foreign country rates, so that's another additional pressure on the Fed to cut rates. But as we know, the Fed has a dual mandate in terms of keeping inflation low and the economy and jobs being uh, in a position of growth. Turning to gold, which we've been tracking carefully here, gold, in our opinion, continues to be quite strong. Had gotten oversold via the RSI. Pullback we saw with the markets being up for 9 days. Obviously, uh, with the risk on equity environment, gold drops. However, with the equity indices down today, gold was up about $70 an ounce today. So gold has been the flight to safety trade, and market up, gold is down, market down, gold is up. Turning to Bitcoin, interesting, Bitcoin was down today, even though it has been rising as the stock market has been rising. And as was noted before in the past, Bitcoin has been more of a coincident or slight leading indicator for the S&P 500. So it's been more attached to equity returns than being correlated with a safety asset like gold. So Bitcoin, however, as you see on the RSI, is now getting into the overbought zone. Slight pullback is probable in our opinion, especially if the market does pull back as well, the stock market that is. Turning to the 10-year Treasury yield, saw Treasury yields rising 4 basis points last week with the strong stock market. Year to date, Treasury 10-year Treasuries are down 25 basis points. We're kind of bouncing along sideways here, waiting to see where policy stability hopefully ends up if there is stability. I think there's a lot of discussions and negotiations going on with countries regarding tariffs and trade discussions. It's good to see that they're having those discussions. And I think the net effect of that will be the U.S. will see some benefits from tariffs, increase revenue collection via tariffs. But obviously, it could have an impact on supply and demand. So we'll wait and see how all of this turns out. Turning to the yield curve, we can see that the yield curve has slightly risen over the past week. The yellow is April 25th, and the blue is May 2nd. The orange is on the top, which is the year-end yield curve. So yields have been bouncing around a bit. Yield curve not showing any steady shifts up or down. It's kind of been volatile here. We continue to see the inversion of the yield curve at the short end, a normally shaped curve at the 3 years and up. Until the Fed does cut rates at the short end, we'll likely see pressures on different economic sectors given this inversion at the short end and normal shape at the long end. So there is opportunity. According to the betting markets, this is Kalshi. There's low expectations for rate cut on Wednesday. 96% uh, of bettors here, and there's $49.6 million behind this, so we like to look at this as potential indications. No change is the bet, and only 3% are wagering that there will be a 25 basis point cut. However, as we said before, oil prices have been trending down. OPEC announced that they're going to be increasing production by 411,000 barrels per day in June, and that's to penalize some countries that have been cheating in terms of exceeding their quotas. So that's going to have the impact of driving down oil prices, we believe, currently and into June. That's good news for U.S. consumers who should see cost of driving decline as we enter the driving season. It will also have a major impact in terms of reducing um, inflation numbers as well. So data like this could be, well, we do believe that the Fed is monitoring this data very carefully, and this will drive CPI numbers down. Whether or not the Fed does take this into account here in May or adopts a wait and see approach in June remains to be seen. Other things that give us concern is credit. There are credit issues here. The year-over-year weekly national bankruptcy filings that we're showing here through week 17. The top line is 2025, and then we show 2024 and 2023 below that. The number of bankruptcy filings is higher this year. So that is obviously a stress point here, and certainly tariffs are going to increase the number of bankruptcy filings, especially among smaller companies, we think. So this is also data we're quite aware the Fed monitors closely. American consumers are also under pressure. This is a chart of large consumer credit balances and the share of accounts that are making just the minimum payment. We're at a huge high of 11.1% of consumers with large credit card balances just making the minimum payment. So consumers are definitely getting strapped here. Turning to the economic calendar, the ISM number that was reported today, actual is 51.6 versus consensus of 50.6. That's up. So the PMI is ISM services, PMI, which is a measure of services inflation, was higher. So obviously that's a negative data point for the Fed to make a cut on Wednesday. That also obviously contributed to the dip in stocks as well, as that lowered the probability of the Fed cutting on Wednesday. That's just one of the data points. As I mentioned, there are other data points to consider. This is a backward-looking data point. I think things like bankruptcy filings, consumer credit, and commodity prices are more forward projecting data that we hope the Fed's taking into account. Balance of trade on Tuesday, 8:30 a.m. So that's an important number to watch to see if what the impact of the tariffs might be. And then Wednesday, 2 o'clock, the Fed rate decision followed with a 2:30 conference call. Those would be must watch events of the week. Thursday, initial jobless claims, and then on Friday, a lot of Fed speeches going on. Turning to S&P 500 company earnings for the week. I'm not going to go through all these. Obviously, after the close today, we've got Ford and Palantir, which are two of the major ones. We're going to tune in and listen to closely. Tuesday before the opening, got quite a few names, especially in the utility space. Constellation Energy, Duke, American Electric. Since those have been some of the stronger sectors year to date, they'll be important ones to watch to see if they will continue to see consistent and strong earnings results. And we'll be interested to hear what they say in terms of demand for electricity, given the AI data farms and servers that have been growing very rapidly. Tuesday after close, AMD, as we mentioned before. Um, and we also have some AI related name, Arista Networks, got Supermicro. Those would be two AI related bellwether names to keep an eye on. Wednesday before the open, Uber, Walt Disney, as we mentioned. Those are two major ones here, but a number of industrial names here reporting as well. Rockwell Automation being one, Emerson, Bundy. Wednesday after close. Not as significant in our opinion in terms of major companies reporting. Some energy companies, energy stocks. Thursday before the open. Uh, Not many major ones reporting. ConocoPhillips Energy is in a downtrend, obviously, but Conoco's an important company in the energy space. Thursday after close. Paramount Global will be an important one to watch for the entertainment industry coverage of potential tariff impact there. And that pretty much rounds up the week, and that ends our weekly update for this week. And we welcome any of our clients or interested parties to reach out if they want to talk to us, discuss any of our Outlook information in more detail. Please feel free to contact us. My emails, as well as Jim Monahan, our emails are listed here. Please feel free to reach out to us. Our website is AmericaFirst.fund. Thanks for tuning in. Have a great week. Happy Cinco de Mayo, and we'll talk to you again next week. Take care.